Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 pips, rocking and rolling here, 19th of Feb 2018. No trade calls, no recommendations, or response for their own stuff because we're here for educational purposes only. So, what's going on? Let's keep this short and simple, as I suspect everybody's going to be pretty much looking at the same thing. The levels are fairly clear, so I'm not sure I can add that much to the commentary. But first of all, let's look at equities. So what's happening on the equity side? Well, there's a little bit of a difference with Nasdaq's holding stronger than the ES and the YM. But basically, what's happened on the ES and YM? So we had this correction back into the 200 and then the sharp pop, right? What we said is don't be surprised, even if we're forming a top, you shouldn't be surprised to see some very, very aggressive relief rallies, which could make it all the way back into, the 78.6s and actually fail from there if we're actually going to set up, a stronger bear market. But so here, to a certain extent, it's a bit of a question of philosophy or religion or bias or whatever you want to call it. We talked about the fact that as long as we traded inside the 50 DMA and the 200 DMA, it was going to be, don't be confused by velocity of move inside range. And we're pretty much stuck there, right? So it's similar to last week in the sense that the bulls are going to say, hey, that's it, we did what we had to do. We caught it at the 200. This is completely and utterly in trend, undeniably in trend. We got a little correction back, and now it's all-time new highs. Here we go. Bye, right? And it's very hard to argue with that. Now, the bears are going to say, again, because the velocity of the move to the downside, because what happened in the VIX, again, I'm not going to go through the whole discussion, something's broken. So, this is the start of something bigger. And again, as long as we don't, really start to take out these highs, there's no point for they're not going to change their minds, right? So even if the main choppy ground we suspect is going to be around this 200 to the 50, as we discussed last time, unless we get daily closes below, there's no way the bulls are going to change their mind. And really, unless we start to get daily closes back above the 78.6 or even higher, the bears are not going to change their mind. So that's why you can see a lot of velocity inside move. And it's very hard to read too much into it. What's interesting to us is we're going to focus on the levels, is the fact that we've come all the way back in the 61.8 held, and we're closing right at this 50. So we don't have a crystal ball, but all we know is that the way this looks technically is that we've put in a little bit of a top, and it would be healthy to see a retracement. So the way we're going to look at this is going into the week, trying to keep it very simple. Our base case scenario is that this move was very, very aggressive. Maybe it was a short squeeze, who knows, right? Very, very aggressive. And for us, the healthy move is for these highs to hold and for us to try and pull back all the way back into the 100. The 100 is right in the middle of this chop zone inside the 50 and the 200, and we're going to let this 100 guide us, right? Daily closes above, bounce back into the high range. Daily closes below, bounce back into the low range. So we're just going to let the levels guide. We're not going to try and read too much into it. In terms of broader picture, again, if we gun to the head, our base case is still that something broke and that we need to retest lower, even if we're going to go much higher. But shorter term, we're going to let the levels guide us. And if you look at the Nasdaq, also fairly technical, because you see how we rallied all the way back into that 78.6, and then that's right where we stopped. So as long as this would hold, we expect to see a little bit of a retracement. The difference on the Nasdaq, which is stronger, is that it's going to be the 50 DMA, not the 100, that is going to be our bull bear line for the week. Okay, Now, the other interesting dynamic, which I suspect everybody, their grandmother, their pet goldfish, and God knows who, is going to be looking at is the DXY, right? Because that's likely holds the key to a lot of these moves, especially the way equities have been trading against the dollar, right? The correlation. So nobody has a crystal ball, but if you had to make a call, it looks like it's trying to base. And as long as we can't attract new sellers below, base case would have to be, and again, I assume everybody's going to be looking at it this way, is that we get some kind of a little bounce on the DXY. Now that bounce could go anywhere back into the 91s or even 92s, 93s, and this is still a level where the shorts are going to be looking to sell into it for a move lower. So again, we don't think it's too interesting here. We almost look at that. You know that zone we set inside the ES, inside the 50 and the 200? We almost equate that to inside the 8840s to 89s on the dollar index, right? So unless we trade outside of that, it's really just the velocity of move inside range. The market's deciding what to do. But base case is, again, as long as this holds, we'd expect this to pop a little bit higher, and that's going to play out for all the other Forex pairs, whether you're looking at Aussie, Kiwi, CAD, the yen, or the euro, right? And euro holding at that big level actually on the weekly, right? If it can't take this out, you'd expect the healthy move to see a little bit of a move back down. Again, you'd expect buyers to come in to try and test those highs again, but here it looks like it's a little bit tired. And if that dollar can rally a little bit, then you'd expect these lows to come into play. And again, that's mirror image. Then again, just look at the gold. No big change on gold. Our base case was that we're going to get a pullback into the 1300 for a break to new highs. Hasn't really played out that way because on this sell here, it caught a bit earlier and now it's failing. So again, even if this is going to be a triple top, what is our base case? Is that even if it's going to pull back, ultimately triple tops will break to the upside. So it's the same thing, a little bit of a correction on the dollar, a little bit of correction on euro. Gold comes all the way back down here, maybe can retest these lows or lower, but as long as this holds, we expect new highs to come in. Now, probably what we think is the most interesting chart, again, is to keep an eye on crude. It's always a little bit of a tricky one, but remember, we're at that big weekly level. So I think if you've taken profits on those shorts we're looking at and you're looking to reload, and again, everybody's going to be looking at the same thing. This looks like an interesting place to reload on the shorts, to look for that move back into the 55s highs, into those lows. We're coming back into the 50, 61.8. This whole area seems to be an interesting level to try to reload. And if you look at it on the weekly, again, this is a very, very big zone. So as long as the sellers come in here, we expect the velocity of the move is to come back down and clip those 55s. I suspect where we differ from a lot of the other people is we don't necessarily believe that this move on possible move on equities, dollar, gold, etc., is going to translate in the classical fashion on the bonds. I still think there's a lot of hanky-panky going on the bonds, and still think there needs to be a lot more pain before we even get a little bit of a relief bounce. I think it has to end with some kind of a flush even before the relief bounce. So I'd be very, very cautious on the bonds. But again, not that interesting, I think, an update, if I have to say so myself, because I suspect everybody's going to be looking at the same thing. So the tendency is sometimes to kind of try and second guess ourselves and say, well, if everybody's looking at the same thing, isn't the market going to catch everybody off guard? Well, sometimes if everybody's looking at the same thing and everything's shaping up the same way, there's a reason, right? So as always, we'd try to avoid having a bias. We try to avoid stroking the crystal ball, and we try to avoid second thinking ourselves, and we'll just focus on the charts and let the levels guide us, okay? Wishing everybody an awesome week. Let's see what we get, and talk to you guys soon. Take care. Thanks for liking. Thanks for sharing. And again, if there's any chart you desperately want me to post, just hit me up on Twitter. I'll post the chart up on the blog or on the Twitter feed. Thank you so much. Bye-bye, guys.